Hey everyone, it is Wednesday, and you know what that means. It means we bring back Matt, the mortgage guy. How you doing, buddy?
I'm doing great, Mike.
Hey folks, just so you know, as if you watch my channel, you know my puppy's not feeling all that well. So sometimes I have to hold him so he doesn't whine. So today is one of those times. So if you hear him whine, realize it's not me. It is Jimbo here. So I didn't want anybody to be surprised. So say hi to Jimbo, everybody.
Hey, Jimbo.
Thank you, Matt. There you go. Thank you for playing along. All right. So what we're going to do here, folks, is we're going to talk about forbearance. Forbearance is an interesting topic. And again, I've been doing this 20 years. I went through the last crash, and you would have thought forbearance was a big topic when single family homes were falling off a cliff, and they just weren't, right? The CDOs and the MBO, all these other things that were going on. Banks didn't do it. It was cash for keys, short sales, REOs, foreclosures. Forbearance was not even a word I ever heard. It just wasn't a topic. But what we saw in 2020 with the shutdowns is, I guess the federal government, FHA, approved forbearance. You basically, banks created a website. You go get 90 days and then you reapply and you reapply. You can get up to a year, likely to be extended. But I thought forbearance is a mortgage topic. I thought the guy who creates mortgages and gets them approved, we should ask him questions and see what's going on. So Matt, let's talk forbearance.
Sure, I'd love to, because I think being in mortgage and talking to the number of clients I do on daily and weekly basis, I've got a pretty good finger on the pulse of what people are thinking, what they're hearing, what their thoughts are. And I was reminded this morning when I gave a presentation to a group that I meet with every Wednesday that, hey, Matt, remember when you told us to avoid forbearance at all costs?
Yep.
Is that still true? And my opinion on things change all the time. Mortgage guidelines change, my opinion changes, rules and regulations around mortgage and forbearance change. And so what I presented this morning and what I want to get across to folks is that where we didn't have a lot of information in March, April, June, and different lenders were treating it differently and whatnot, there's more clarity, there's more flexibility. I view it differently. And so I'm just stating on record that I'm not telling people to avoid forbearance at all costs anymore. And I understand that there's lots of folks, somebody calls me and them and their wife both work in the restaurant industry. They're both out of work. They don't know when something's going to be passed to get more unemployment. Take forbearance if you need it, I think is my message. And really, really interesting stats I looked at.
Yep.
That there's 175,000-ish people that are delinquent, haven't taken forbearance, but would qualify for it.
Oh,
so
wow.
It's one of those things where it's like, if you knew this existed, rather than be delinquent, you would just enter into forbearance.
Right.
And so to try to reach some of those people, I think it's worth talking about. Somebody did a survey and said, why have you not taken forbearance if you haven't? 70% of people said fear of a lump sum repayment. And part of that might be, to be honest, me and a bunch of folks at the beginning saying, don't do this. It's going to, if you don't have the means now, or you're having trouble now, 3 months, 6 months from now, a huge payment is going to be even harder. And you don't want to put yourself in that position. And so another 56%, because they could check all that apply in the survey. So it's not going to add up to 100, but 70% said fear of lump sum repayment. 56% said, I just didn't know I could request it. So there's people out there, and this is the crummy part. There's people that don't need it, that know about it, and they're taking it. And then there's people that truly need it who don't know about it and aren't taking it. But as a broker, I've got 60 different lenders who deal with hundreds of different servicers, and they're all pretty much aligned now in December of 2020 with, you take the forbearance, they can work out a number of different repayment options. The easiest on the consumer and the one that makes the most sense for people that are truly suffering, put those missed payments, whether it's 3 or 6 payments, on the back of your loan. If you refinance or you sell your home, you obviously have to pay that back, but there's no interest being charged. There's no penalty. Once you get out of forbearance and you've missed 6 payments, you're back on your feet, you're back to work, you're current, there's nothing past due. you're eligible for refinance. And
Yep.
that's something that scared a lot of folks too. And truth be told, I was kind of warning folks against, don't hurt your opportunity of getting a future refinance by entering into forbearance. What I'm telling you now is, by entering forbearance, you won't. As long as you take care of your credit,
Mhm.
and once you get current, then you're able to refinance.
That's awesome. So I just want to double check that, because again, this again is a new topic for this crisis. It has evolved over the months that we've been in it. We're in this longer than anybody would like. We're near the end, knock on wood, hopefully. So banks get to make the rules, right? Banks, they got the money, so they make the rules. So first and foremost, I was like you. It's like, I'm not sure I trust banks, right? They say one thing and then there's fine print and they point at it and it's too small for any of us to read. So I was nervous about it impacting your credit. I was really nervous, to your last point, about it impacting future refis because rates were going down, right?
Right.
So I want to check that. So what I think you're saying is, let's just say you're a borrower, you're 6 months, you're in it legitimately. Use the restaurant example, right? Mom and dad work at the same restaurant, they're out. They miss 6 months. First and foremost, you're absolutely right. I've seen banks say, you know what, we're going to take those 6 payments. We're going to create a second. We're going to put it on the back. No payments due, no interest. Basically, you will pay us if you ever pay off the first, which is in 20 some odd years, you refi or you sell. So they are made whole, but you as the individuals are not hurt, because when you come out of forbearance, when you go back to work at the restaurant, you're just paying the normal payment. No increase in interest, no increase in payment. It's like nothing has changed. Cool. Right? Awesome. But what you just said, I didn't know. I assumed mom and dad coming off forbearance, being current, they would need to do that for a year or something, because there's going to be a gap in payments, right? When a bank looks at your payment history, they're going to look at that and go, oh, they missed payments for 6 months. Now what I'm hearing you say is banks go, that was COVID. We see they're in the restaurant industry. They were out of work. I mean, no harm, no foul. And now they're working again. So
Right. Which I'll clarify this piece of it. They'll lend to you, most of them. Some want to see you back and pay 3 payments. Most are just saying you're current. We're not showing any past due,
right.
which is not past due. Like you said, it's just a silent second sitting on there and
Yep.
and whatnot. So as far as hurdles with forbearance, you don't have any of those. But what you are going to find, Mike, is that you're qualifying. If you have some sort of variable income, like the restaurant example, now you're back to work in March of 2021, and your year to date is skewed because you didn't work for 2 of those months.
Right.
And your 2020 numbers have been disastrous because you couldn't work. You were put out of work. We won't get into our buddy Newsom.
Yeah. Don't do that, because he's the only guy I thrash. He is terrible. I'll just leave it at that.
Right. So qualifying wise, you might have issues, but
but it'll be a real loan. It's real debt to income. So it's not like you're automatically put in the penalty box. If you can show your income is back to normal and you qualify other reasons, that 6-month payment gap is not a non-starter. That's what I'm hearing.
Right. Which it's important for folks to understand. Many lenders have a serious issue with any late payments on your mortgage.
Yep.
And some of them, it's a non-starter. You've got to be 12 months without a 30-day late.
Yeah.
Or you've got to be 12 months without 2 30-day lates, the ones that are more flexible. So the message is, don't ever let your mortgage go late.
Yep.
If you need forbearance, take it.
Yep.
And make sure that you're super clear about taking forbearance and entering into forbearance. Don't just stop making payments, because that could be disastrous for your credit score. It could be disastrous for your ability to get future financing.
So this has been very owner occupant, which we have to hit. It's the most people affected. But what about investors? I know some investors who have properties in areas that were very affected by this crisis, thinking their tenants work in the restaurants, the hotel industry, the casinos, all of that. What about an investor that's got to take forbearance across 5 or 6 properties? Same rules apply, or does an investment loan treat it differently?
Same rules apply. And it's important.
Cool.
Yeah, it's important too, that I've heard and talked to clients that say, well, my primary is different. My primary is not in forbearance. I've taken forbearance on the investment properties because my tenants aren't paying and therefore I can't pay, which I totally understand. Unfortunately, if you're in forbearance, you're in forbearance in the eyes of the lender.
Yeah, it doesn't matter which
you're
loan.
in or you're out.
Okay.
And so once you're out, they'll lend to you once again. And I've seen investor clients who have weathered the storm, they've taken forbearance, and then they've contacted the lender who says, pull yourself out of forbearance on these other properties, will immediately lend to you. But they do have to come out, even if it's not on the subject property. Even if your forbearance is on 3 investment properties and you're trying to refinance your primary, you're in forbearance in the eyes of the
That
lender.
I think that's fair, right? I mean, you're either in or out. It's like you're pregnant or not, right?
Yeah.
I think that's fair, right? If you're trying to, again, right? Banks have the money, banks make the rules. So in their eyes, one forbearance, it's like any other. So I think that makes sense. So in the end, folks, what I want to leave this conversation with, if you need it, take it. This is a crisis like no other. I would tell you to take it. If, stop dipping into your savings. If that's going down, make sure you have food, you can pay for your utilities, all of that. It's there for helping everyone. The repercussions of this aren't nearly as severe as we feared the first couple of months it was announced, because there was talk about just big payment shocks. That was a real possibility. But again, we're almost through this. It's almost over. A couple more months, we're going to be okay. And I think forbearance, really what's happening here is banks got smart. That's really what happened. Banks remembered 08, 09, and 10 and how painful that was. They got smart. It's far easier to miss a few payments, sticking on as a second, versus having a 50% drop like we saw in California, in Vegas, and other markets. So again, you may think banks are being nice. They're just being they're being okay, but they're being smart financially. So that's what I
Right.
have to say. Any
Yeah.
closing thoughts?
Exactly what you were saying. And banks are protecting themselves as much as they're protecting you, but they realize with so many people in need, they have no choice really. They've got to play ball, and it's important. Like you said, there's no real repercussions if you do it right.
Yeah.
Go ahead.
I was just going to wrap this one up, reminding folks that you lend in California. You're a California licensed mortgage broker. And because you are a sponsor of One Rental at a Time, you are actually offering anybody who reaches out to you a discount. You're waiving the processing fee, which I remember is $6.95, which I think is outstanding. How can people reach out to you if they want to get a new loan or refi a loan with a California property?
People are free to call or text. I'll just warn you, when I'm on back-to-back calls, it's probably easier just to shoot an email over to Matt, MATT, at mattthemortgageguy.com. Tell me about your scenario. Attach a recent mortgage statement if you'd like, and say, hey, here's what I'm thinking. What do you think? And I'm giving good advice all day, every day. Sometimes it's stay put. Sometimes it's, look for that loan product somewhere else, but good advice will be had.
Yeah, and I love that. And I actually have validation of that. One of my friends reached out to you. They were all the way through a refi, and you basically said, I can't beat that. Just stay where you are. Why pay me, or why pay twice? So I was like, dude, I like that guy. So thank you for doing that. And we'll get on to topic number 2. Thank you very much.